Hey everyone, welcome back to the AI Tech channel. Today, we're diving into a story that's got Wall Street buzzing. Is the Nvidia dream fading? Bank of America just dropped a bombshell about AMD, and it's not pretty. We're going to break down what's happening, what it means for investors, and what the future holds for these two AI giants. Buckle up, because this is a wild ride. Okay, let's get straight to the point. Bank of America is essentially saying that AMD is struggling to keep up with Nvidia in the crucial AI market. Their analyst, Vivek Arya, is maintaining a neutral rating on AMD stock, and that's a polite way of saying he's not seeing much upside right now. He highlights AMD's challenges in software, deployment, and overall scale. This isn't just about faster chips, it's about the whole package, and Nvidia seems to have a significant lead. So, what's really going on with AMD? Well, their latest earnings report showed some weakness, especially in the data center segment. While they're seeing growth in PCs and gaming, those markets are more cyclical and can put pressure on profit margins. The real problem, according to Bank of America, is AI. AMD is playing catch-up, and that's a tough position to be in when Nvidia is running laps around the competition. AMD is pinning a lot of hopes on their upcoming MI350 AI chip, but even that's not a guaranteed win. The MI350 is expected to launch in mid-2025, which puts them roughly a year behind Nvidia's current offerings. In the fast-moving world of AI, a year is an eternity, and even when the MI350 arrives, there's no guarantee it will be enough to close the gap. Remember, it's not just about raw performance. It's about the software ecosystem and the ease of integration, where Nvidia has a massive head start. This analysis reinforces what many of us already suspect. Nvidia is the undisputed king of the AI hill. They control a staggering 80 to 85% of the AI chip market. That kind of dominance gives them incredible pricing power and allows them to invest even more in research and development, further solidifying their lead. It's a classic example of the rich getting richer, and it's making it very difficult for AMD to break through. The question becomes, how can AMD possibly challenge such a powerful force? But here's where things get even more interesting. Bank of America also points to the growing trend of hyperscalers, companies like Google, Amazon, and Microsoft, developing their own custom AI chips, also known as ASICs. These chips are designed specifically for their own workloads, and they could potentially reduce their reliance on off-the-shelf solutions from companies like AMD and Nvidia. This is a long-term threat, but it's one that both companies need to take seriously. Are we entering an era where giants like Google and Amazon will design and build their own AI hardware? Let's not forget about the elephant in the room: Trump's proposed tariffs on Chinese goods. This is creating a lot of uncertainty and could have a significant impact on both AMD and Nvidia. Nvidia, in particular, relies heavily on global supply chains and the Chinese market. Tariffs could increase costs, disrupt production, and limit their ability to sell chips in China. This is a major risk factor that investors need to be aware of. Could this tariff war be the catalyst that finally slows down Nvidia's momentum? It's not just Nvidia that's feeling the pressure. Other major semiconductor companies like Qualcomm and Texas Instruments have also seen their stock prices decline recently. This suggests a broader negative sentiment towards the semiconductor industry as a whole. There are concerns about slowing economic growth, rising interest rates, and potential disruptions to global supply chains. This isn't just an AMD or Nvidia problem. It's a systemic issue that's affecting the entire sector. Beyond the financial risks, there are also ethical considerations to keep in mind. AI technology can be used for both good and bad purposes. Nvidia's chips, in particular, are incredibly powerful and could potentially be used for military applications, surveillance, or even to create autonomous weapons. It's important for companies like Nvidia to be mindful of the potential ethical implications of their technology and to take steps to ensure that it's used responsibly. Are we doing enough to ensure that AI is used for good, not evil? So, what does all of this mean for investors? Is AMD a buying opportunity or a value trap? Well, it's complicated. AMD has a lot of potential, but they also face some significant challenges. They need to close the technology gap with Nvidia, navigate the complexities of the AI market, and deal with the potential impact of tariffs. It's a risky bet, but if they can pull it off, the rewards could be substantial. But remember, this is just one analyst's opinion. So do your own research and consider your own risk tolerance before making any investment decisions. What about Nvidia? Is it still a safe bet? While they face some risks from tariffs and geopolitical tensions, they remain the dominant player in the AI market. They have a strong track record of innovation, a massive market share, and a loyal customer base. While their stock price may be volatile in the short term, their long-term prospects remain bright. But, as always, diversification is key. Don't put all your eggs in one basket, even if that basket is filled with Nvidia chips. Is Nvidia's dominance sustainable in the long run, or will a challenger eventually emerge? The future of AI is uncertain, but one thing is clear. It's going to be transformative. We need to ensure that AI is developed and used responsibly, ethically, and for the benefit of all humanity. That means investing in education, promoting transparency, and fostering a culture of innovation. It's up to all of us to shape the future of AI and to ensure that it lives up to its potential. What role will you play in the AI revolution? Let me know in the comments below. Thanks for watching, and I'll see you in the next video.